Hey guys, welcome back to the channel McNallie Money, home of all things stock, investment, and personal finance related. Now it's hard to believe we're only a couple of weeks away from Christmas, so I wanted to get this video out. We're going to be covering my top 3 picks for the month of December. These are all small cap Canadian companies. They've all sold off in a big way over the last couple of weeks, and I think this really presents a great buying opportunity, and these are a couple of companies that you may want to add to your Christmas shopping list. Now with that being said, please take a second, hit the like button, you guys. It's a huge help to both myself and the channel. If you're not already subscribed, McNallie Money, feel free to do so. And let me know in the comment section below what companies you've been buying over the last couple of weeks, if you've been taking advantage of this recent dip we've seen, and your thoughts on the 3 companies that we're going to talk about in today's video. Now with that being said, let's get into today's video. Okay guys, so that's right. For today's video, I'm going to be providing you with my top 3 picks for the month of December. Now, if you've been paying attention to the market over the last couple of weeks, you'll notice that many small caps and even medium cap companies have been absolutely massacred. And I think this has really presented a great buying opportunity for the end of the year here. So as many of you are probably aware, December really marks tax loss season or tax loss harvesting, which means people can actually sell stocks which they've lost money on during the year and use that against their income on stocks that they've actually made money on. So we do see a lot of sell-offs generally around this time of year, and it does seem that it starts a little bit earlier each and every year as people are really trying to time that 30-day window before they can go back in January and repurchase these stocks that they've actually sold off. So I think that really is what's behind a lot of this recent volatility we've seen. Obviously the pandemic, there's new waves coming out. That has an impact on a lot of these stocks as well. And the 3 companies that we're going to be lining up today, not only are they all 3 Canadian based, they're all 3 trading under $10 Canadian, but in my opinion, they're all 3 pandemic resistant here, you guys. And I'll explain why as we go through today's presentation. So the first one up today, as many of you can probably imagine or would have guessed, is actually one of my favorites, Hut 8 Mining. This is one that I've been aggressively adding to over the last couple of weeks here, you guys. If you paid attention to the channel, I've followed Hut 8. I started a position at the $6.75 type of range. I followed this one all the way up. It actually cracked $20 a couple of weeks ago, and the share price has retreated massively over the last couple of weeks. So if we look at a 6-month chart here and you go back to November 8th, this is when Hut 8 Mining actually broke the $20 mark for the first time. And you can see since then, over the last almost month to be exact, the share price has dropped about $8, which equates to roughly 40% of the company's market cap. Now, for those of you who are unaware, Hut 8 Mining is a crypto mining company based here in Alberta. They mine specifically Bitcoin. They do have some Ethereum activity that they convert directly to Bitcoin. They're sitting right now on a reserve of over 5,000 Bitcoin, and they have a monthly mining or run rate of about 300 Bitcoin. So obviously the price or value of these crypto or Bitcoin mining companies very closely track the price in the underlying asset, which in this case is Bitcoin. But if we look at the price of Bitcoin over the last month as well, we've seen it drop from about $79,000 Canadian to about $65,000 Canadian, which represents a drop of approximately 17%. So Hut 8 Mining is down 40%, while Bitcoin is only down 17%. So to me, that represents a buying opportunity here, you guys, because there's really an imbalance in the ratio at which Bitcoin and Hut 8 have declined over the last month. Now, in addition to that imbalance, there's also been some great news out of Hut 8 over the last 30 days. So they've actually announced some additional units that they're going to be purchasing to increase their hash rate, or essentially the production rate or mining capability that they have within their company. And in addition to that, they also came out with their monthly update here. So this is for the month of November. This came out December 2nd, and it actually provides an update on their mining activity for the previous month. So all of these mining related companies, whether it's Bitfarms, Hut 8, Hive, they've really been doing this quite regularly, and I love it as an investor in these companies. So you can see for the month of November, they mined 265 Bitcoin. So even at today's price of approximately $65,000 Canadian, that's still a monthly run rate here of $17.2 million, or about 8.8 Bitcoin per day. Now 100% of this Bitcoin that they mined in November was deposited into their reserve or custody. This is consistent with what we've seen in previous months, and Hut 8's hold on for dear life strategy. So they're really trying to hold on to as many Bitcoin as possible. They have a very low cost operation here, great energy or variable costs, and they really are able to limit the amount of money they're spending on the production of these Bitcoin. I think the last time I actually looked into this, it cost them about $3,000 to mine each Bitcoin. Now, based on that addition of 265 Bitcoin in the month of November, the Bitcoin balance they hold in reserve is now 5,242 Bitcoin as of November 30th. And again, if we multiply that out by today's price of about $65,000 Canadian, you actually get a total value of Hut 8's reserve of just over $340 million. Now keep in mind, this is about a $2 billion market cap company, you guys. So a huge percentage of this market cap is actually sitting in their reserve in Bitcoin. Now at the start of the video, I mentioned each of the three companies we're going to talk about today is pandemic resistant. And the reason why I believe Hut 8 and any of these crypto mining companies are resistant to the pandemic factors is because as this virus continues to persist, the government is going to be forced to subsidize, print more money, support more families, and each and every dollar that the government prints, whether we're talking about in Canada or the United States, actually devalues the currency, and that's why we're starting to see such massive moves in inflation. And in my opinion, one of the best hedges against inflation is Bitcoin, because again, it's capped at 21 million Bitcoin, and they cannot produce any more than that, regardless of any external factors on this cryptocurrency. So in my personal opinion, there's nowhere for Bitcoin to go over the next 5, 10, 15 years but up. And for companies that are holding a huge reserve of Bitcoin and have mining potential in the 200-300 Bitcoin per month range, I think this is an absolute gold mine, and they're literally printing money that's going to be much more valuable over the coming years and decades. Now moving along here, number 2 in our list today is Tenet Fintech Group, formerly Peak Fintech Group, trades under the ticker symbol PKK on the Canadian Securities Exchange. This one is trading at $7.50 as of close on Monday. You can see again a massive pullback here, you guys. Market cap on this one is sitting under $1 billion now. And if we look at a 6-month chart, you can actually see back at the start of September, this stock was trading above $14. So it's essentially cut its share price in half over the last couple of months. And again, I think this presents a huge buying opportunity if you're looking for exposure in the fintech space. Now, for those of you who are unfamiliar with this company, they operate primarily in China. They've got a lending ecosystem, and really they're trying to bring together and streamline the lending environment for small cap companies looking for financing and people or companies that are looking to lend or borrow money to those companies. Now, in addition to that, they've added a number of different facets to this company. So they've got some supply chain, some distribution, they're adding on new clients, and this is a company that I'm very bullish on over the next couple of years. Now, with that being said, again, similar to many of these other companies, they have not been immune to tax loss selling pressures. And on top of that, there's really been a lot of bad press related to the Chinese government and their involvement with companies operating within their country. They've had some big news come out over the last weeks, primarily the government asking Didi to delist in the United States. This has really shook the investment community, and I think Tenet Fintech has been guilty by association because they are primarily based in China and they have a lot of exposure to that market. Now, with that being said, it does seem the Chinese government is going after some of the mega cap companies, and Tenet is really on the other end of the spectrum because they're really trying to support and help foster growth with small and medium cap companies. So to me, in my opinion, this one feels safe. I think they're helping competition overall, and I don't believe this is on the government's radar at this point in time. And with that being said, a great example of the demand for this type of company, Tenet actually reported fiscal Q3 results November 15th. So a couple of weeks ago, they reported 71% year-over-year growth with revenue just under 26 million and net income of positive 1.5 million for the quarter. So the demand is definitely there for this type of service or solution. I think the company has sold off in a massive way that's not representative of their future growth. And I think this one really does present a great buying opportunity Fintech is a super popular space right now. Some of the big players in the US have really seen their share price go up in a massive way, and they haven't been hit as hard as some of these small cap players that operate in overseas markets. Now, the final company in our top 3 here that I'm buying in the month of December is CloudMD Software Services, trades under the ticker symbol DOC on the TSX Venture. This one closed out on Monday at $1.20 Canadian. Again, you can see a massive sell-off here, you guys, over the last couple of months. So if we go back to the start of July, this company was trading above $2.30. Again, share price has virtually been cut in half. This is really a play on telehealth. So if you believe the future of medicine is really centered around at-home solutions, I think this is definitely one to take a look at. You can think of CloudMD basically as a smaller Teladoc Health. Again, Teladoc has sold off in a big way as well, but this one presents, I think, a little bit more upside potential because you really are getting in at the ground floor. Now, if you look at the market cap here, this one's under $300 million Canadian, whereas Teladoc is trading around $16 billion US. So a fraction of the size here, you guys. But CloudMD has been on a merger acquisition spree over the last 12 months, and they've been grabbing companies up and folding them into their overall business operation. And I think the proof of this, or proof of concept, is really going to come through in their 2022 revenue. Now, in terms of being pandemic resistant, this probably is the best of the batch here, you guys. Obviously, as the pandemic persists, people don't want to go out in public. They don't want to go into doctors' offices and hospitals, or they're actually physically prevented from doing so. So alternative care solutions or telehealth provide a great alternative. And as people start to experiment with this delivery method and these platforms, they're going to become more sticky, and it's going to become a habit very similar to what we've seen with online shopping. So I think the pandemic is actually great for these type of companies. And I think this sell-off, again, is not representative of the business as a whole and its future growth prospects. Now, in addition to my thesis around telehealth, CloudMD also reported blockbuster third quarter numbers here, you guys. This came out November 29th. They put up record revenue, just under $40 million, and this was actually the first quarter with positive adjusted EBITDA. Now, everybody who's watched this channel for a while knows how I feel about adjusted EBITDA. The metric can be a little bit misleading, but again, the fact that this is the first time in company history that it's actually a positive number definitely is bullish in my opinion. And the other thing I wanted to call out here, if you look at the actual growth rates, Q3 represents a 150% increase over Q2 of this year and just about an 1100% increase over Q3 of last year. And that's really the effect of folding in all of those additional businesses that I referred to a couple of seconds ago here. CloudMD has acquired countless companies over the last 12 months, and we're really starting to see the results of those actions in top line revenue growth. Now, in terms of annualized revenue run rate, they're forecasting about $185 million based on all of these acquisitions, which means at this point in time, they're basically trading at about 1.5 to 2 times sales, which again, in my opinion, is very cheap for a company in this type of industry with this type of growth. Now, the final thing I'll mention with CloudMD, they actually just rolled out a very successful program in partnership with Sun Life, so one of the biggest life cos here in Canada that's really focused on providing solutions for disorders including depression, anxiety, and things that a lot of people are really feeling in a bigger way based on the pandemic. So again, in a lot of ways, I think the situation we find ourselves in 2021 is really bullish for this type of company, and it's really going to drive a lot of customers and people to these alternative platforms. So for those reasons here, you guys, I definitely think these 3 companies deserve a look in the month of December. They've all sold off in a major way along with a lot of other small and medium cap companies here in Canada. All of them are in super exciting industries with huge growth, and I think they all 3 represent a great value proposition if you look at the current share price, market cap, sales, and overall future growth prospects. Now, with that being said, feel free to leave a comment in the section below. Let me know your thoughts on these 3 companies. If you're currently holding any shares, if you're not already subscribed to the channel, McNallie Money, feel free to do so. And if you're still watching at this point, hopefully you found some value, so make sure you hit the like button on your way out. That's all for now. Thanks so much for watching, and have a great rest of your day.